Will you please give a big round of applause to David Morgan?
All right, well, it's always hard to live up to those huge introductions, so let me just cut it to the chase. I just wish I was the man my dog thinks I am. All right, so a few things. One, I want to acknowledge Rob Goodman for putting on the Silver Symposium for the second year in a row. I'm real happy with this venue. I hope you are. I really think it's a good place to have it. Of course, I want to thank all the companies that came here to support us. Obviously, silver has not been the stellar, shining investment many of us thought it might be at this point in time. And then all the staff and the people behind the scenes that really never get recognized, let me just recognize them here from the platform. So on the silver side, I highly recommend, on the silver side, I highly recommend that you listen to Jeff Christian. Jeff will go into details way down the rabbit hole as far as, and factually. I'm going to talk about silver, but not primarily. I think on the manipulation, for the record, I've said this for years, I think it's the most concise and accurate. You don't have to agree with me because there's a lot of emotion surrounding the quote unquote manipulation. My take from pretty much day one has been this: you cannot manipulate the long-term trend. Within the long-term trend, you can beat the crap out of it for a lot of time. So I'm sticking with that. It sounds good. I believe it's true, but certainly, you could build a case either way. And I'll just talk more about silver than I planned, but from 2000 to 2011, gold went up 11 years in a row. I mean, we used to go to these conferences and, people would be glomming on me. It was like rock star status, When things are moving up, times are good. But I tried to maintain myself like a good NFL quarterback. When things are high, don't get too high. When things are low, don't get too low. And I never dreamt we'd have like a 10-year down market in the metals. But we have, or sideways, you might say. We did a big loop in gold. Silver hasn't done as well in the last decade. But today's today, and my speech is going to be about the Silver Psyop, and then I'm going to go into the crypto conspiracy theory that I did so much work on, and I'm going to finish up with, I think, more important than anything, and that's the bail-in situation that we're all facing in the United States and the United Kingdom. So John Perez contacted me, and he was a bit of a penny stock promoter, and I'm always a little leery of those guys, but without the real risk takers out there looking for metal in the ground, we don't have a society. And the big companies won't do it. They let these guys risk all their capital, and if they find something, then they'll buy them out. So anyway, I just was neutral, and John kept talking to me more and more and more about this Bitcoin situation. And the more I listened, the more I realized it was a now or never point. I had to either start a series or just ignore it. And I decided to go ahead and take the risk, which I'm a risk taker, and start this dialogue with John and many others. As you know, I did 23 episodes of the Crypto Conspiracy, and we'll get to that later. After several runs at the Crypto Conspiracy with John, he said, well, what about the Silver Psyop? And so I'll get into that right now. It's a video embedded in here. I take a great deal of care with these presentations. Usually they work, but we'll find out. All right, everyone, this is David Morgan from themorganreport.com, and we have a wonderful Monday. nice and bright with snow on the ground here in Washington State, and the famous at this point in time, John Perez, and we are going to delve into Silver Psyop number 3. So John, the floor is yours.
Okay, we're going to make this one quick to the point, and it's going to just make it clear for everyone. Because we can go down the rabbit hole, everyone gets lost, and we'll make it simple. Because I've gotten so much feedback from thousands and thousands of people who've said they've watched the Crypto Conspiracy. Thank you all for watching on Telegram, and all the people that came from Mike Adams, Natural News, Brighteon, and the Morgan Report. You guys have been awesome, and people are awake. I'm gonna say that cryptocurrency series is probably responsible for about $250 million in sales of crypto, and that's been added to the silver markets.
All right, everyone, this is David Moore. All right, so I'm going to pause there. I don't want to hit it. I think there's another video there. So what John said was that a lot of money has moved out of Bitcoin and the cryptocurrencies back into the silver market. And he gave us a big number. And I've got slides later in the presentation. I looked at it, objectively, and what I determined was certainly money that would have gone into the precious metals did move into crypto. But it's not the amount that would be significantly damaging on the gold side. On the silver side, you could build a case that, there was enough movement between silver and crypto and the other direction. It could build a case that it had some noticeable impact. And the reason for that, of course, is the unit value of silver relative to gold and the amount of silver in investment purposes relative to gold. So it's just such a small market that any movement, it's like a penny stock out here, these stocks trade by appointment only sometimes. And so if you buy 1,000 shares, you might move a 3-cent stock to 5 cents. Well, percentage-wise, that's a huge move, and it's not much volume. So you got to be a little careful in these markets. Chen, am I telling the truth? I'm sorry. Thanks for being here. All right, so that's the idea. Let me go into more detail. I think I have a video behind this one as well. Took me almost all day yesterday to put this all together. All right, it is David Morgan, themorganreport.com, with John Perez again, and we continue. We don't want that. All right, so the crypto conspiracy. One thing that John really pointed out to me, which I didn't know, was how involved Jeffrey Epstein is with Bitcoin. And so we went to this site. This site is called Graph Commons. You can verify this for yourself. And what it does is it takes well-known people and connects the dots to other people or entities or nation states or governments or whatever. So this big one here, and there's several of these, I decided just to narrow it down to 2 or 3, shows a connection between Jeffrey Epstein and Hong Kong. Now, what's significant about that, most of you know, and some won't, that Tether, which is the USDC, the US stable coin, which basically all cryptos are a function of, there are other stable coins, but that's the main one, is from a Hong Kong entity called Tether that the SEC has been on for a long time. They've never been audited. We don't know if they really have every dollar behind every stable coin that they claim that they do. We don't know what their commercial paper portfolio looks like. It's been rumored they own Evergrande paper, which is about worthless if you're not a Chinese citizen. So there's a lot of unknowns here. So I, kept hearing this information from John, started to verify it, decided to put on this crypto conspiracy series, as you know, and now I'm summarizing it somewhat. So you can see that a lot of the crypto stuff came out of MIT, Harvard. This Joey Ito, he's way up there in the Bitcoin world. Bill Gates. Oh, who else? Several on there. Again, you can go to graphcommons.com. You can type in Jeffrey Epstein, and again, you can connect the dots for yourself. So this is the slides I made yesterday, as I said. So I want to see, really did this idea that John just indicated was true or false? How much impact do we really have? And when I got done with this little study, I was I was happy to do it and also a little surprised because I actually thought there was more of an impact than there really could be. So the total crypto market's about 1 trillion. Bitcoin's about 40% of that. The total gold market is 11 trillion, and on an annual basis, it's about 115 billion. Now, the silver market is only 100 billion total above ground, and it's about a billion ounce a year market at $25 an ounce is 25 billion, so you could correct that number to 20 billion if you want. So 20 billion versus 1 trillion, yeah, you could have some impact moving out of silver and into crypto, or out of crypto and into silver. Gold, you're looking at 1/10 of the market if everything went into it, and if only 40% of it went into it. Now, there's a lot of younger people buying cryptos that don't want anything to do with gold, never heard the word, don't care. So my point being is that it really didn't have much of an impact, even though you might hear things to the contrary. John has an expression, when Bitcoin dies, silver flies. And that's more of a philosophical take on things, not a how much money's moving in or out. It's where investment flies. It's where it goes. Money, capital, has a mind of its own, and it goes to where it's treated best. And in times of uncertainty, you will find money flowing basically uncontrolled. This is where the foreign exchange markets become important, the bond markets, of course, the number one, debt markets. If you don't trust a dollar today, will you trust it 6 months from now, 9 months from now, 5 years from now, to 10 years? How about the 30 year? If you don't trust it now, are you going to trust it in the future? And that's what we're facing. So moves from the crypto into silver could have had a notable effect, and certainly not true of the gold market is my conclusion. So this is my claim to fame. Not the most flattering video I ever did, from the car with Daniela Cambone. Never dreamt in my wildest dreams this thing would hit 2 million views and be the #1 most watched video on Stansberry Research. But it's because of the title, Banks to Seize Your Money in the Coming Financial Crisis. A lot of people are interested in that statement. So I should have put this slide ahead, but I don't know if you can see it. I can see it over there pretty well. So this is graphically what I just said. It shows the amount of capitalization of gold versus Bitcoin. So you can see how small Bitcoin is to the gold market. So again, to say that this big move from Bitcoin to gold or vice versa had an impact, yeah, take a look. This goes along with one of my premises. This is right off my Twitter feed from yesterday. Most crypto is still junk, according to JP Morgan's blockchain lead claims. Excluding a few dozen, most cryptos are bound to go away, according to, and I'll mess it up, Umar Farouk, Chief Executive Officer of JP Morgan's blockchain unit. I agree with that. I concur. I think it's a similar thing to the tech wreck. I got a lot of .coms that made money in a brief period of time. China's not that big on crypto, although they are on their central bank digital currency, which is different from crypto. It uses the blockchain. So this is the crux of my take today. Again, you know, if you really want a good in-depth look at silver, I would certainly recommend you go to Jeff Christian's presentation. Jeff will take you through the numbers in a very logical manner. So bailouts. In the 2008 crisis, it was that, and even the mainstream financial press uses the word crisis. And during the bailouts, there was a lot of pain and agony, as I show you. But under Dodd-Frank, they changed it. And in 2012, and this is a brief quote, but what they're saying is that there will be no bailouts, there will be bail-ins. And as a depositor in a bank, you are considered an unsecured creditor, and there is the possibility, I don't want to scare people, I just want to be truthful. There is a possibility as an unsecured creditor you could lose your deposit and gain stock in the bank. So maybe that's not a bad thing. Maybe the stock's worth something, right? Maybe not. So, and it's in the IMF report, et cetera. So when Lehman failed, the unsecured depositor received 8 cents. And a Spanish bank that had 1 million depositors, they were forced to become stockholders, and they received about 5 cents on the dollar. So that gives you the idea what happens in a bail-in. Real life, this is, empirical evidence. This isn't something I made up. This is data. This is verifiable. April 18th, 400,000 depositors of 5 regional banks in China were prohibited from making withdrawals. I think most of you are aware of that. It's not like the entire banking system of China, but there is this region, these small regional banks that are having problems. And right now, to the best of my understanding, and I didn't double source this, so I'm not 100%, but the Chinese authorities are paying out about 50,000 yuan, which is about 7,500 US. So a lot of the impetus to do this part of the speech came from an article that actually John Perez sent me. It's from a gentleman in the United Kingdom, and the title is "When Your Bank Fails, Don't Walk, Run." And it goes back to my premise really from day one, which is that sound money has a purpose. And there have been, the age of empires have come and gone throughout history. And it's a cycle. It's, the Ecclesiastes sees nothing new under the sun. It's really nothing to get all panicked about. It's part of the process. And the process is we start basically with nothing and we start to build, and you get the pioneers and the frontiersmen, and you start to build civilization and things get really good. And then you get too good and everyone gets kind of kicked back and not pulling their weight, so to speak. And then things happen and then you start over. So again, it's not something that we're facing. The only difference I would make here is that, to the best of my knowledge with recorded history, it's the first time it's probably global. Now you could argue in the Roman Empire that it was global, but not really. I mean, the Byzantine Empire really stayed there while the Romans fell, and then you've got the Eastern and the Western Roman Empire, and of course the Eastern stayed more or less intact. So that is, my main message is that you probably need exposure to something that can be trusted, but you don't need to go overboard. I'd say the biggest criticism I'd make on my followers is that they learn the sound money theory, they learn about gold and silver and past, and they do too much. You don't need a lot to hedge normal activity, normal real estate transactions, stock markets, bonds if you're so inclined, that type of thing. In fact, my biggest amount I've ever said publicly is 20%. And Jeff did a study presented at the Silver Summit a few years ago from 1968 forward, and gold, not silver, was 25%, and this is perfect portfolio analysis. So he's actually higher than I am. So, and that's what he did, with his own work. So the point is you don't need 100%. You don't need 70%. Now, is that true in all cases? No. It's not. Why? Because of my bias. I'm free market. If you think you need 100% in the metals, who am I to say you're wrong, right? But nonetheless, on balance, in the aggregate, what would you look at? I'd say, what's the right amount? Jeff did it with gold, and he did otherwise. And one thing I wanted to point out, sorry, I'm going to digress. Mike Lorenzo is here as well from the Silver Institute. That's kind of a rare treat. Thanks for coming, Mike. And I definitely recommend you listen to what Mike has to say. In fact, Mike has been such a help to me over the years. Sorry about that. He introduced me to a gentleman called Mike Watson recently, or Matt Watson. And wow, what a plethora of information from that guy. Thank you. So I am done a bit early, and I will certainly take questions. I don't know if we're set up for that or not, but that's a front page. It's an electronic report. It's put out once a month. I also do videos during the interim and bring people up to date on all markets, but primarily the metals. I've looked at the bond market, the US dollar, the S&P 500, some of the ETFs, and on it goes. And we're on social media in 2 places. And I don't know, I don't see someone out there. Can we take questions? My hearing's pretty good. Yes?
I would just say the same portfolio of analysis on
Jeff, thank you. Jeff Christian from CPM Group. He did the analysis I talked about from 1968 to present day, or nearly present day, a couple years ago. The balance in portfolio for maximum portfolio performance over the long term, he said 20 to 25% silver. So thank you, Jeff. So I'm near the end here. I am an ambassador for the LOAD project. So take that into account. It means I'm really biased. And why am I biased? Because the LOAD project was started in a very unique way, and I still like to brag about this. Because as the crypto phase started to gain more and more momentum, we were there fairly early. And this group came to me and said, hey, we want to start a silver-backed, at the time it was silver only, cryptocurrency, are you in? And I listened to them and I said, don't know. I don't make snap decisions. I'm a deep thinker. Let me look at it. So I did, and I thought, yeah, it's probably got as good a shot as anything I've seen. I like the plan. I felt integrity. So the only way you could get in the beginning was you had to contribute silver. You couldn't send Bitcoin. You couldn't put in US dollars or euros or whatever. You had to contribute silver to start the program, which is one of a kind. Since then, we branched into gold, and it's available at lode.one, LODE.ONE. Some of you gray hairs out there might say, well, it's a .com or a .org. It can be a .anything these days. It could be a .tv. It could be a .one. So it's lode, LODE.ONE. Tom Halsplatz, I'm not saying it right. Tom, forgive me. I had your name a second ago. Halaplatz has got these cards. If you sign up for an account with LOAD, we will give you 1 silver ounce. Now, what is my take on digital, yet physical, that you can take out of your digital wallet? And my take is, one, that's the trend we're going to. I mean, look at China. 400 million use no cash whatsoever at all. They just use their wallets on their phones. China's the leader in central bank digital currency. No ifs, ands, or buts about it. So I look at it as a tool in your toolbox. It's a way to utilize gold or silver in a manner that's efficient. There's not much transactions because there's really no middleman. It's peer-to-peer pretty much. And I think it's the way of the future. So I would suggest you certainly talk to Tom, get that free ounce of silver, and if that's all you ever do, then that's all you ever do. I do, again, believe that's the trend, especially with the young people. They're really not interested in us, gray hair, sound money, gold, silver nuts. I can tell by the amount of hits I get on my Twitter or whatever. It's not passé by a long shot. And once, if the financial crisis goes the way I think it could go, then there will be a run to gold like we've probably never seen. But that's hypothetical. I've been saying the same story for quite some time. And, we had a pretty good run. I mean, from 2000 to 2011, as I said earlier, we were on fire. And then it stalled out. And I knew the market was overbought. And just for the record, I did call that top. If somebody that, there's people in the audience, I won't name them, that have been pretty darn accurate on calling these tops. And in fact, some of the people that work with me said, if I only listened a little closer to so-and-so, I might have done a little bit better, because these markets move up and down. All markets do. But there is a philosophy behind holding precious metals. And again, if you have the right amount and you do your regular life, I think that's the best way to balance your attitude toward this sector of the market. So I am really done. I don't know how much time we've got left. Looks like it looks like I got about 10 minutes. Is there anybody that's got a question? Yes, sir. So the question is on the bank bailouts, if I had $500,000, how would I structure it, knowing that it's a possibility? And the answer is I keep pretty much not minimum exposure to the bank balance, but sufficient because of the business, right? But I don't want to keep a huge cash balance in there for very long. But my take on first of all, it's a possibility. It's not a certainty. The second thing is to take a deep breath and think it through. And if you think it through, what is the most likely scenario? And the most likely scenario in the $500,000 case is FDIC protects you to $250,000. So chances are, most likely, thinking logically, that they would take $250,000 and you still keep the $250 that's in there. So you lose half of your account in the $500,000 scenario you asked me. Is that guaranteed? No, it's my thinking. I'm sharing my thinking with you. You can agree or disagree. So if you're in the like 250 range or lower, I wouldn't want that much exposure personally, but you're probably pretty safe. You know, when you look at what's on the books, you know, what's at law, color of law, mandate, whatever you want to call it, what's written down on a piece of paper and held by authorities, usually they stick to it pretty much. So if they're going to insure you to 250, chances are really good that if you're at that level or lower, you really don't have much to worry about. But thanks, it's a very good question. Yeah, I was asked this before. The question is, well, okay, you talked about bank bail-ins at a bank. What about if I'm in a brokerage account, and what is the facts there? First of all, a brokerage account is insured for $500,000, okay? So the SIPC has a different set of rules or a different mandate than the banks do. And the real caveat, I wrote about this in my private work, and I think you already saw it, but some of the SIPC is directed to a bank anyway. So now it gets fuzzy. The answer, look in the eyes, I'm not sure. If it's not associated with the bank, then you're probably good to $500,000. And again, you just have to put this into consideration. You know, I hate to be the doomer gloomer, but I also want people to be aware of what's going on. And we already know we had a bailout. That's a fact. And looking back, you know, in my estimation, there's been too much funny money printed from that point forward to get us to where we are now. And I think they made the problem worse. You agree or disagree? Most of you sitting in these seats probably agree, but you don't have to. So the question is, we're near the end. I tend to agree, although I've been saying this for a while. And what does it look like when it fails or as it's failing? What will be the upshoot, and what will we, you know, what do we look forward to, or what are we going to see thrust upon us? And the real answer is no one really knows. I don't think the authorities know. Now, I could be wrong there. I'm sure they have plans. I'm sure they have plan A, B, and C. I know the direction they want to go, and I've said this on podcasts, so that those that have heard me say this, bear with me. But, you know, Mark Carney gave basically the same speech in 3 places, and he's not with the Bank of England anymore. But at the time, at WEF or Davos, the UN, and in Jackson, he basically said what they wanted, not what will take place. So I'm going to go from that, and you know my thinking, and come down and say what I think will happen. But what they want is MMT, modern money theory, no cash, and no backing. And everybody has to take a digital account, and that way you are, you know, track, trace, all your purchases are known. That's kind of the outcome that he, again, stated in probably the 3 most powerful places that the public knows about relative to the monetary sphere: the UN, Davos, and Jackson. What do I think? Well, I think that's definitely what they want. I don't think it's going to happen quite the way some of us maintain in our heads. And I think as the globalism is declining, not increasing, and the more complex a society or a system becomes, the more points of failure there are. And the more points of failure there are, the more it can accelerate to the downside. I mean, anyone that's been in the markets for very long knows that markets go down a lot faster than they go up. And I think that's the system here that we're talking about, the global system, if you want to call it that. So what I think will happen is more and more, and I think we're doing a panel on this later, nationalistic tendencies where Ukraine says we're not selling our wheat out for everybody, we're going to sell to this one country and keep the rest for ourselves. And, you know, will that spill over into the oil situation? Well, look at Russia. You know, what are they doing with their natural gas to Germany? You know, this is a big bone of contention, and it's really, even though we hear a lot of rhetoric, my contention is it's over when it's over. I mean, there's a lot of talk, and we don't know for certain until winter hits and we see what the flow rate is from Russia into Germany on natural gas. But, you know, these are things are very trying times. So my point in the answer is, 1, I don't know. Secondly, I think that there'll be less and less ability for the globalistic trend to continue. It will go the opposite way. You'll see more and more. In fact, if you go as far as Cliff High, which some of you know that name, and some of you have no idea who I'm talking about, in his database, he talks about SOC, self-organizing communities. I mean, when I was in China, and I'm not talking Hong Kong, which I've been several times, but when I was in Beijing, met the mining bureau, they met me at the airport, I went up the Civic building. I mean, I had a pretty high ride, and I was there for a while. And you get out into the mining communities, they have this expression, I do not speak Mandarin. Chen, can you help me out? They say that the emperor is very far away. In other words, they go about their lives, they go about their business, they go about their community, and they really don't pay a lot of attention to what the hell Beijing is doing. So I think you can take that in context, that even though we have these leaders and these controllers and all this stuff, if you look at really what you do during your normal daily life, are you giving them too much headspace? Are you thinking about what might, could, should happen, rather than just being present and living your life to the best of your ability? I wasn't planning to say this publicly, but I will. David Smith, my lifelong business, I wouldn't say partner, but business associate, been with me 20 years. We've done, I won't say 100 mining trips together, but probably close to that. He's written for me for years. He's a great speaker. He has terminal cancer. Otherwise, he'd be here. And when you get moments, and we all do in our lives like that, it gives you pause, And thanks for the question. I think it's very important. In fact, this is, more heartfelt than anything I've said up to this point. But you reflect, on what you really have at the end of the day. And it's really not how much silver I've got or, this place in Mexico. It's the memories that I have of people that I met that were meaningful in my life. That's what matters. At least for me. As for you, gentlemen, thank you. So maybe I should leave on a roll. I think I've got 5 minutes. Or any more? Yes, sir. Yeah, I think I get your point. So it's talking about, the big macro picture and, this reverse repo, I think it's up to $2 trillion. And, this is mind-boggling to me. These are assets sitting on banks' balance sheets that are loaned overnight to get a small amount of interest. And why would you do that? And the answer is because of trust. You're not trusting to loan it out into the marketplace. That's a general answer. It's more complicated than that. But he's asking, is that kind of holding back the amount, and this is why I read your question, you can correct me, but is that sort of like stifling the amount of, let's say, inflation that we might see? And I'd say yes, and the reason being is that, and a lot of us Austrians, all we talk about is the increase in the money supply, and that's inflation. Technically it is. You have inflated the money supply, but that doesn't mean you've got inflation in the marketplace. Because if I give you $10 million and you stick it in your safe and you never do anything with it, yeah, I've increased your net worth, but it's just sitting there doing absolutely nothing. And that's a good metaphor for what's going on in the reverse repo market and some of these other asset-based entities that just basically sit on cash and maybe move it back and forth or use foreign exchange or whatever. I mean, it's a very complicated market system we've developed in the world now. But I think that's a valid point, that even though it exists, how much oomph does it have in the marketplace? And if just going back and forth between this safe and that safe every night, it's really not having much of an effect. Oh, that's complicated. Jeff, and he's got someone also, Bob Coleman, who I know well. I know Jeff fairly well, and a gentleman I haven't met is going to talk about that topic at length. I think it's later today. But there's two markets, really. I mean, there's the derivative market, which is the silver market. And, we used to say it's based on an open outcry system. Well, the open outcry system went away a long time ago. And it's based on electronic trading, and a lot of it's run on algorithms. So that sets the price on the COMEX. And, of course, the LBMA is included, but COMEX is what we focus on. And then there's the retail market, where we actually have to phone up somebody or go to somebody's shop and buy it. And when we do that, we find that the premiums are extremely high relative to what the spot price of silver is. And it continues to increase. The first time that happened was in 2008. I think silver went down to 9 on paper, and we're trading on eBay, and well, I should say eBay, but other places like 13. And I wrote an article about the arbitrage available because I'd say the market would narrow, and everyone thought it would narrow the other way, meaning to go from 9 to 13. I said, no, it's going to go from 13 to 9, which is what happened. This time, however, we're not really seeing that. What we're seeing is these high prices are maintained, which means the market's telling us that there's enough people out there that want physical silver that they will pay the premium to obtain it. And how long can that go on? The answer is not determinable yet, but if it keeps draining off whatever silver supply there is, it should produce upward prices across the board, derivatives markets included. And one thing, and you brought it to my mind, Laura, just snapped in there, and I'll leave with this, but one thing that's very seldom talked about, and I'm going to pick on Mike Dorenzo for a second, is we never really get the data that Hanning Harman used to give us from my old man memory of what the military take on silver is. You know, now it's in the industrial thing. I'm not arguing that number. I believe it from both Jeff and Mike. But what subset of that goes into the military? And silver, I hate to say it, but silver is a metal of war. I mean, silver is very key, as we know, to communications and solar and everything else that goes along with, you know, this industrial aspect that silver has. So I still am a believer. I think if you have the right amount, you can relax. I think how this thing gets muddled through and what the end result is may not be as bad as most of us imagine, but we want to be vigilant, you know, and remember, we need self-responsibility. If I'd say one other thing in closing, it's that in my opinion, that's probably the one thing that's lacking in our society, the way I see it at this time, which means if you really want freedom, you've got to be responsible for every choice you make and own it. When you're wrong, promptly admit it. When you're right, you don't need to gloat, but you got to own it. Too many people have been taught to be a victim. It's not their fault. Well, in some cases that's true. There are victims, but it's rare. I'm done. Thank you. Appreciate you all.